Well, for the sake of time, I'll get started anyways. I'm Juan Carlos Reyes. I'm the president of the National Digital Asset Commission from El Salvador. I've been in this industry since 2013. I've been in computer science since much earlier than that. What we did in El Salvador and the journey that I'm going to share with you has 4 specific pillars. I've been asked to talk about cybersecurity, anti-crime strategies, fancy name, sounds cool title. But mainly what I'm going to speak about is securing digital assets through innovation and regulation, which is what we've done in El Salvador. There's 4, where's the clicker? Yeah. There's 4 main things that I'm going to want you guys to take back from this. Number 1, I'll discuss the technology, what is digital assets? And this is perhaps the foundation of what's wrong, and the reason why the industry hasn't moved forward as it should is the lack of understanding of what digital assets are. Secondly, obviously I'm going to talk about El Salvador, about our journey, how we got there, what we do. And then we'll get into the topic of cybersecurity and anti-crime implementation, what we do in El Salvador. And I'll close off with something that Patricia mentioned, which is the global supervision and collaboration. Digital assets does not have any geographical barriers. The supervision of it shouldn't have geographical barriers either. We'll start off with, what are digital assets? I think it's easier to understand what it's not. And what digital assets is not, it's not a traditional financial instrument. Digital assets are programs, computer programs, that are trained to behave like financial instruments. So they make you think that they're financial instruments, but they're computer programs. Now, the advantage of this, and this is perhaps what I would like you guys to understand on the difference of digital assets and traditional financial industry, is that because it is based on the blockchain technology, it has 3 very important characteristics that allow it to really be a much better tool to conduct commerce. One of them is the fact that any transaction in the blockchain becomes immutable. What that means is that once you do a transaction on the blockchain, it cannot be changed. 2 is the transparency. Every single transaction in the blockchain is transparent. You can log in right now, I can send you money, and you can see how that money goes in Bitcoin. In the case of Bitcoin, how Bitcoin is developed, it goes from me making the transaction, reaches a node, goes to the memory pool. Once it's in the memory pool, you can actually pull up and see the transaction in the memory pool, and the transaction gets settled when the next block gets executed, or the equation gets solved and someone finds new Bitcoin. What this allows us to do is the traceability. Every single Bitcoin after creation, and I'm talking Bitcoin specifically because I also think that if you're in this industry, that you need to understand Bitcoin first and foremost, because it is what started the industry. Bitcoin, unlike other technologies, such as Adera, such as anything else, Bitcoin is a financial instrument. Bitcoin was created to be a financial instrument, and it's actually a political statement that we see in what we call the Genesis block, which is the first block created on the Bitcoin network. The first block talks about the 2008 financial collapse and how it is that the banks had to bail out, the government had to bail out the banks again, using tax dollars to bail out the bank. It is important, and perhaps, and this is something that I ask every time that I talk to another regulator around the world, I've been everywhere, do you have any Bitcoiners on staff, or does anyone here even know what Bitcoin is, more than just, oh yeah, I heard about it? None of that stuff. Like, do you know what Bitcoin is? Do you know why it was created? Do you know what it does, how it works? And if you don't even have that, then you're completely lost, because you're trying to regulate, supervise, or work with something that literally to you is hocus pocus because you don't understand the technology, you don't understand how it works. So it is important and vital for everyone working in this industry, supervising, regulating, or being part of this industry to first and foremost understand Bitcoin. Whether you become a Bitcoiner or not, that's up to you, but you should at least understand Bitcoin because the key features, transparency, traceability, and mutability, is what has turned Bitcoin, and we talked earlier on in the past panel, that when Bitcoin first started, it had obviously criminals were using it to transact, but they quickly realized that Bitcoin wasn't a good tool to use to do criminality because it has traceability and immutability. So you made a transaction, you made a mistake and bought something and paid for illegal stuff, well, that transaction cannot be changed. And it's transparent, so we can see all the transactions. So a high level, and almost, I would estimate that close to 90% of all illegal transactions that have done in Bitcoin, actually 100% of all transactions that are illegal in Bitcoin are traceable. We know, we can trace them where they are. We can see, I mean, you guys have heard of the Satoshi wallets, for example. As soon as there's a movement in the Satoshi wallet, that's going to happen. See, I knew a Satoshi wallet was Love it. I was about to say the Satoshi Nakamoto from Salvador. Don't give it away. Yeah. The last time I made fun of Adera or any other side chain. Yeah. So as we continue on and on, as the slides say right now, somebody hacked my presentation, blew up the national grid in Uruguay in order for me how to continue talking about the reality. How happy we should hear that. But I lost my presentation. Hey, but my laptop's not that big, so I can continue. Man, I'm only on the first side. It's gonna be, you guys better hang on for a couple hours. You go for an option. I'm not showing up. Forget it down. Test. Okay. Hey guys, why are you leaving back there? I know it was you guys. These guys are Ethereum people. Okay. Yeah, I know. It's very suspicious. Okay, we'll continue. So, to the point that I'm trying to hammer down is that the best analogy and the easiest way for you guys to understand what I'm trying to tell you, I'll give you a very simple analogy. How many people here have ever ridden in an electric car? And show hands. Should be almost everyone. Uber is electric here. Okay. El carro eléctrico. So, what is an electric car? Well, the obvious answer is it's a car. I mean, it's got four wheels, you got a key, goes from point A to point B. So to us, the consumer, the electric car is a car. But what's going to happen if you bring that electric car to your regular mechanic? Your regular mechanic will have a heart attack because the electric car is not a car. The electric car is a computer program that has been programmed to behave like a car. Traditional mechanics have no clue on how an electric car works. The other regulators, central banks, superintendents, these are the traditional mechanics of the financial industry. We're asking traditional financial people to understand how to work in an electric car. That's the simplest analogy I can give you to understand what the real global problem is in digital assets. Now El Salvador realized this, that's why we have an electric car mechanic, myself, and 40 other people that specialize in digital assets to ensure that we don't have this pragmatic problem. But the reality is this, that if you were to ask me to do what they do, I can't. I'm not a financial wizard like my good friend Roberto and Patricia are. I'd be lost in their industry. But this is my industry. And there is a big difference. Yes, the cars are cars. To you, it's just a car. But that's the true reality. That is, guy talk about the sandbox and everything. You can try whatever you want. But if you don't understand what the problem is, if you don't understand the root cause of why it is that we're not getting ahead, then there's no point of trying new things. So to close off that section, it's important to understand that digital assets, although they look like a financial instrument, in reality, they're not. There are better tools. When you're looking at a traditional car, you have a problem. Sometimes they kick it and it works again. Well, that doesn't work in digital assets. We have a computer and we ask it questions and it tells us, look, this is not working properly. And that's the beauty of the lack of criminality that we have in our industry, because you can trace back. And that's what we do in El Salvador. We have huge amounts of information of what people are doing in the industry, and we're able to keep a very safe ecosystem. So this brings me to the whole crypto crime. And I'm going to call it the debunking the crypto crime myth. And I say debunking because when I've had people from world organizations, you guys have all heard the famous tornado cash. And I'm like, what the hell does tornado cash have to do with any of this? Like, yes, tornado cash, it's like a blender, you throw money in, blends it around, no one knows what comes out. But that's not the biggest worry. That's not even an issue in the industry. That's very small to the real issues that could be considered crypto crime. And I will talk about that. There is a famous author who is like the Albert Einstein of crypto crime industry. His name is Nick Fernando. I call him Nick Fernando because he's I made him Salvadorian now. He's a good friend, so he's come to El Salvador. And he wrote the book that's called There Is No Such Thing as Crypto Crime. And the point that he's trying to make is that we're focusing too much on the technology, when the reality is that the criminals will use anything, and we have to focus on the criminals. Financial criminals have existed since way before Jesus, way before we had history. It's always been financial criminals. And this makes the argument that you can't be too tech. You need to know traditional financial systems in order to identify crime, financial criminality. So in the commission, we have a perfect blend. We have over 25 ex-workers from central banks, superintendents, that collectively have over 60 years of experience in financial instruments, financial crime, etc. So it can't be just too focused on crypto crime or too focused on technology. You have to have a perfect balance. But the technology hasn't been built to be a crime. The technology has been built for people to use the tools and be able to interact with each other. Now, a criminal sees a door. I left my door open because my friends were coming, but a criminal saw the door open and came in and stole everything. And that's the sad part. And that's why we need regulation, because we need regulators to look at things from a different perspective and say, look, what you're creating sounds good. Leaving your door open is a good idea, but not in this neighborhood. This neighborhood, somebody's going to come in and steal all your stuff. And that's the rules that the regulator creates. When we look at the technology, we see it as a whole and where it is that it can create inflection points. Even if you're a good person, you're not creating criminality, you might be aiding criminality by doing this. So that's why we need the balance between regulation, supervision, and technology. Okay, so let's go back to El Salvador. I always tell people El Salvador did not exist before 2021. At least it didn't exist to me. So I was born in El Salvador, left when I was 5 because of the war, grew up in Canada. That's why I sort of speak English. And then I retired, bought a private island, lived super, super well, until 2021 that this young guy, president now of El Salvador, decided to legalize Bitcoin. And the family goes to me, isn't this that crap that you talk to us every Christmas and Thanksgiving? I'm like, yeah, that's the same thing. They're like, well, go back to your country and help them. I'm like, yeah, it's murder capital of the world. I'm not going back to El Salvador, but I am in El Salvador. So I said started in 2021 because it went from the most violent country, the worst history in the world, now to the reference of many things. I mean, we're the safest country in America. We are world renowned as the #1 regulator in the world, and we have many other things that we're in top of the world on. But before I talk about the Salvadorian experience, I do have to make a little caveat that we started with nothing. It's easy to be #1 when you don't have all this baggage to drag around, and we didn't have a strong financial industry that we're complaining about everything. We're saying, no, you can't do that. It was fairly simple, and El Salvador always had a good track record when it came to regulation and supervision. So it was simple. It was easy for El Salvador to be where it's at, but it is not the same for the other countries. Like Uruguay, for example, everyone here has an opinion, and sometimes, and I was telling Patricia, I'm like, I've talked to 3 people, and that's an hour opinion. I can't ask everyone's opinion. We had no opinions in El Salvador because it was a country that the only opinion was a gang member saying, you either pay me $1 a day or I'll kill your child. So it was, people were in or against development. So things that have happened in El Salvador have happened really quickly because the population have embraced it and have embraced it fully. I mean, there's always people that have questions, people that are against it, but overall, the population has been behind this, has supported. We look at what is now known as the Bitcoin experiment, and everything depends on how you measure it. So the measure globally, or where people expect the Bitcoin adoption in El Salvador to be a success of, is that the Salvadorian population adopts and uses Bitcoin, which is very low, but that's simple. That's because we have the US dollar. We currently have the most dominant currency as our day-to-day use of currency. But if we didn't, look at Bolivia, overnight, USDT only. So the measurement of success to me in El Salvador was the fact that we legalized Bitcoin, created an opportunity for international investors to come into the country to actually invest in Bitcoin, gave a channel to the population to be able to accept Bitcoin, but at the same time be able to receive Bitcoin and instantly receive US dollars. They didn't have to keep Bitcoin. So there were systems in place. It was a fantastic experiment that I still enjoy and see good things about it. But overall, the adoption of Bitcoin in El Salvador is very low. And that is because there is no need to adopt Bitcoin like there is in Argentina, not really Uruguay, but Paraguay, and no, Paraguay is pretty salty. Bolivia is the perfect example. So what we learned from the adoption of Bitcoin, and in my perspective, the greatest benefit from it was to understand that digital assets are not a financial instrument. Digital assets are a computer program. And this gives us the vision to the future. Well, gave the president, I can't take credit for this, I wasn't even there yet, but the president came and he had a very visionary young guy. Well, he's older than me, so, but anyways, very visionary guy. And what he said is, you know what? Let's not just do what most countries are doing, which is the reason why regulation globally has advanced is thanks to FATF. FATF has implemented rules and said, guys, listen, you have to take this seriously or we're going to sanction you over if you don't take this seriously. So every country in the world now looks at, okay, well, virtual assets, how do we do this stuff, right? And that's the main reason most of the countries have implemented something just to make sure that when the mutual evaluation by FATF comes around, they don't get slapped in the head. We were different. The president was able to see this as a global opportunity to lead the world in digital assets, which is his vision since before he was president. How does El Salvador positions itself to lead in different technologies and different industries? So in 2021, Bitcoin adoption, the understanding that Bitcoin is not really a traditional financial instrument. The central bank, the superintendents, great organizations, amazing people, super smart, couldn't figure out how to work with Bitcoin. In 2022, the discussion started that, look, maybe we need to remove all regulation and supervision from the central bank and the superintendents and create an independent body called CNAD. The law passed in 2023 and we implemented the framework. 2023 is when I was asked to come in as president of CNAD. I love the idea, I agreed, and jump on board. Since 2023, I agree with the government that if they wouldn't meddle too much and allow us to create a global regulation based on high standards, we were going to become number one within a year. We were very close. Within a year, we became number two. But today, CNAD is the number one regulator in the world. What we do as a digital asset commission, we focus to regulate digital asset service providers. But more important than just regulation is the aspect of supervision. Because regulation starts off blindly. Someone promises you, someone shows you, whatever, blah, blah, you believe them. Are they going to follow up with it? Every Bitcoiner knows the phrase, don't trust, verify. And that is what we do in the commission. We ensure that it is not just what you say you're going to do. We create a supervision manual for every company that gets approved. My buddy from Argentina was making fun of us because we do have an 84% denial rate. But that's for a reason. It's because we're the only country that has clear rules on how to be part of the ecosystem, how to do this legally. And everyone is looking at how to do this legally. So it's not that they want to come to El Salvador, it's just that they're desperate and they need somewhere that people can tell them, look, this is what you can do and this is what you can't do. And this is how you do business. The same thing happened in the States. Commissioner Pierce from the SEC at a conference, she said it clearly. She said, I wish you would spend most of your time in building great technology and not trying to figure out how to stay out of jail, which is what you have to do in the States, because you didn't know if you were violating SEC rules and then end up in jail. So what we've done in El Salvador is we become the number one, there's no number two, but it's some weird country called Switzerland, never heard of it. We become the number one country in regulating digital assets, but that is because of the approach that we took. Again, not sure if any country can do this. We started with a blank sheet. We were able to do this in El Salvador because we didn't have what every other country has. We started with a blank sheet and focused on how do we create regulation that allows companies that want to be here long-term to thrive. Now we focus, and again, we're Bitcoin country for a reason. We're not crypto coin country as this report that I really like called us, because for us, it's a clear understanding what crypto is. In crypto, to me, Ethereum, Hedera, all these other tokens, they're investments on fantastic companies that are building infrastructure that are going to build the solutions for the financial industry to thrive. But they're companies investment in companies. Bitcoin is a financial instrument. That's the biggest difference. So we're Bitcoin country, and then we're technology agnostic. Even if a company comes and they want to use Hedera, they want to use Chainlink or anything, they're more than welcome to. But for the country itself, we're Bitcoin, and the regulation is based around an understanding how digital assets works, and what we need to do in order to regulate them. And what is that? Our number one thing is ensuring AML, very comprehensive rules for detecting and preventing money laundering. We don't want to become the money laundering capital of the world. The financing of counting terrorism. Now, globally people say AML and CTF. For us it's different because we were victims of terrorism for about 30 years. Past 20 years in El Salvador, you had gang members that you had to pay money to stay alive. We don't want that to ever happen again. Therefore, the reason why we have very strong investigative units, crime investigative units, is because we don't want terrorism to take root again and be financed. We have transparency, ensuring that every single company not just knows their customer but keeps a good track record. We're probably the only country that fully complies. All of our companies need to comply with the travel rules set by FATF. But in addition to that, we also have know your transactions. Therefore, we don't really work too well with the centralized projects that have a lot of speculation. We need solid projects that do have a real value, that do have a quantifiable, measurable, and that we can supervise. Now, again, we are El Salvador, small country. I am the regulator of El Salvador, looking to the benefit of the Salvadorian population, not the world's population. So yes, we have a very high rejection rate, but that's because many projects, although they're fantastic, although they want to do great things, they don't come to provide a service to the Salvadorian population. So it is not my job to supervise. This has allows us to create a scam-free ecosystem. We go now specifically into what changes or things we implemented in El Salvador when it came to the law. When it came, well, every country, pretty much every country except El Salvador as of today, has a lot of unregulated markets. Because what I noticed when I started this, there were countries that would say, well, forbidden to use digital assets, or cryptocurrencies are not permitted by the central bank. Well, people are still going to try to use it, people are still going to buy it. So you can block the sun with a finger, but it doesn't make it go away. So if you don't have rules, if you don't have procedures to allow access, you can do what I like Uruguay said. He said, use it at your own risk, but not forbid and chastise it, but use it at your own risk. In El Salvador, the law created one single point of entry. And that's what I was telling the guy, that if you're in El Salvador, you're promoting, you're doing anything in digital assets without my permission, we will find you. And we find them all the time. And sometimes it's an honest error. We're lenient with those. But most of the time it's a Ponzi scheme or somebody trying to rip off the poor population of El Salvador. And those we don't let off the hook easily. No, they don't go to the CCOT, the famous jail that's only for terrorists. But they do community service. And it's a lot of community service. So what are we focusing in El Salvador? Young guy here speaking this morning, he mentioned the real world assets and exchanges. The biggest technology transfer, and I see it as a technology transfer, is, I was last week, I was in Colombia speaking in a fintech event, and for most of you, this is fintech. For us, people from the blockchain industry, fintech is a faster horse. Blockchain technology is a car. It's completely different. It comes to really replace the fintech. The fintech is adding technology to an old industry. Now, when it comes to blockchain technology, it just behaves, works differently, and it comes to create something completely different. Therefore, we've created rules and processes to be able to regulate and work with real world assets. Biggest danger of countries that don't apply regulation is that you're opening the door to the peer-to-peer market. Now, remember at the start of the conversation, I told you that when blockchain technology has traceability, immutability, and forgot what the other one was. But bottom line is that every transaction on the blockchain we can see, and by you allowing a peer-to-peer market and not regulate it, and not creating a proper environment for exchanges to be here, you're allowing criminals to come in and sell dirty coins. So it's just like someone from Paraguay crossing the border with a lot of Paraguayan or a lot of dirty dollars and selling and laundering money. The peer-to-peer market is wide open for money laundering, but unlike dollars, unlike fiat money, when it comes to digital assets, we can see where that money is coming from. We can see if there is money that Al-Qaeda is laundering in Uruguay. It's not happening right now, and I mean, there's no strong investigations on this, but it's possible to see how the peer-to-peer market can be used to launder money. And this happens if you don't have proper rules to license exchanges. So my message to regulators globally is make sure you get regulated entities to do exchanges where you can get the information of the users and their behaviors and be able to identify criminality. Lack of having this really exposes the country to a lot of risk. Global lessons from El Salvador: build the technical expertise first. As I said, definitely, if you really want to do this right, understand blockchain technology before attempting to throw the monkey wrench at it and hit it with a hammer, which is what most countries are doing, is let's try this, and it doesn't work. Create, and this is something that not many people will do, not many countries will do, but like El Salvador, create a specialized regulatory body with people that understand the technology and people that know what they want. In El Salvador, I know what industry I want, I know what industry I don't want to deal with. I don't want nothing that's a speculation. If your product is not really backed by real world assets, I can't measure it, I can't tangibly assert that it is there, chances are you're not going to get approved. Implement strict licensing standards. Yes, P2P did us the world a favor by asking everyone to have a registry, but it's also a danger if a country just opens a registry and allows a free-for-all anyone to register and say that, oh, I'm registering Buenos Aires, in Argentina. You have to have a process with the strict licensing standards soon as possible. Before the first companies that came into El Salvador, and still some of the companies that come, are the scammers, are the people that come to sell and really take advantage of the industry. To close off, digital assets have no boundaries. That means that a transaction with Bitcoin can be done from here, from India, from China, with the same speed globally. This traditional finance mentality that we have with the barriers, it hinders supervision of digital assets. We in El Salvador are regulators of some of, I'll say supervisors of some of the largest companies in the world, like Tether. And sadly, people don't understand our industry. So Tether, for example, was not created for the traditional financial industry. Tether USDT was initially created to be the market maker of crypto exchanges to provide that liquidity when you go from Bitcoin to something else or Ethereum to something else. That is still over 90% of their earnings. Now that the financial industry and everyone's picked up this stablecoin idea, everyone talks about stablecoins, regulation, let's get into stablecoins, but it's understanding the technology. So when you're supervising Tether, where the supervisors are Tether, as a regular traditional financial person, you're going to say, well, here's a company that's worth or has liquidity of $163 billion. What are the risks? Well, I run to the bank. What if people ask for their money? But that's not really the business of Tether. Tether, most of the money actually stays in exchanges, and it exchanges between other assets. So there's very little risk for running the banks, and we run models on this. So in general, what I want to say is that it is to the benefit, and I mean, we've sent an MOU to the Central Bank in Uruguay. We have an MOU with Argentina, Paraguay, Colombia, many countries. And our goal is to evangelize the other regulators to understand that this is not a glimpse of maybe it will, maybe it won't happen. Because as I said earlier on the conversation with the panel before, Bitcoin alone is $2.3 trillion. That's one of the top 10 largest assets in the world. So this is not a maybe anymore. This is a fact. The longer you take to understand that this technology is not new, that it is here, and that it is the future, the farther back you're going to be to try to make a positive change or for your economy to be part of the solution. Thanks.